And today we're going over one of our favorite stocks in the semiconductor equipment business, and that is Lam Research. And that stock symbol is LRCX. I know it's a funny symbol for Lam Research, but it's a pretty good company, folks. And let's see what it does. Well, Lam Research Corporation is a supplier of wafer fabrication equipment and services. So in other words, it's not the semiconductor part of the industry such as NVIDIA and advanced micro devices. It makes equipment for the semiconductor business. But its products address a variety of applications, including thin film deposition, plasma etching, single wafer cleaning. All of that, I have no clue what it is. I've heard of it, but I don't know. And foreign sales account for 92% of total sales. Now, customers in excess of 10% of sales are Micron Technology, Samsung Electronics, Hynix, and Kioxia. And 22 research and development was 9.3% of sales. It acquired Novellus in 2012, has around 17,700 employees, and increased the number of employees by about 50% over the past 2 years. So that's something very interesting. Now, let's see what the numbers are, 5-year averages relative to the S&P 500, or I should say the average stock in our database. Average stocks are in the blue vertical lines, and Lam Research are the green vertical lines. So when we look at the clean surplus return on equity, we see the average stock about 13.5%. And folks, it's been that way for 50 years or so. Even Warren Buffett mentioned it in one of his reports from the 1970s, and they used that number. So we're looking at this stays fairly constant during recessions, depressions, and economic expansions. So anyway, the clean surplus return on equity for Lam Research is almost double the average stock. Now, this is a 5-year average, so pay attention to that because we're going to see something that we don't really like. Net income, 17.2% for Lam versus 13% for the average stock. And then revenue is almost double the average stock at 13.1%, average stock at 7.1%. Now, let's look at the numbers a little bit closer. And first thing I want to show you is that this company every year has grown its earnings. Now, net income represents the traditional accounting earnings. You take traditional accounting earnings, take away or subtract non-recurring items and future liabilities such as options that the company uses to pay some of its management positions. So yeah, we want to clear all that out so we get an idea of what the core operations of the company is doing. Now you can see it's gone up every year until next year, expected to decline. So what does that do to the clean surplus return on equity? Well, it was going up nicely, doing very, very well, and expected to come down under our 20% threshold for 2024. Now, here's some things that we point out. Once we see that, now we have to start looking around. Retention rate all the way down here used to be 100%. That's when the company was growing. Now it's about 71% for next year. So in other words, the company realizes that it can't expand as fast as it was, so it's putting less money into expansion, and that other 30% or 29% goes into that dividend. So we don't like to see that so much in a growth stock. We want to see 100% retention rate. Now, that net income growth and revenue growth averaged higher than the average stock over 5 years, but look what's happening this year, 2023, and next year, 2024. Well, it's almost zero for this year, 2023, and next year it goes negative. In other words, revenue growth is slowing down, which means their profits are slowing down. So we have to take a good look at this stock because of the company itself slowing down. Now, one of the things that we have to look at are some of the reports that are coming out, and Lam Research, as well as the rest of the semiconductor industry, is saying recently revenues have declined as a result of a softening demand environment. Now, this is in the equipment that's supplying the semiconductors. So maybe Lam Research isn't making the right kind of equipment. We don't know about that, so we don't have that inside information. As a consequence, and I'm reading a report here, Lam is seeing semiconductor chip manufacturers reducing wafer fabrication equipment spending. So in other words, the product that Lam is putting out, there's less of a decline for it. But on a positive note, Lam continues to see improvement in supply chain constraints and has been able to fulfill shipments of nearly all outstanding back orders. And over the long term, management is confident that innovations in the semiconductor industry, such as 3D device scaling, multiple patterning, process flow, and advanced packaging chip integration, will drive sustainable growth. Okay, is that nice, or those nice big words to tell us don't worry about this decline? Well, we're worried about it, but don't forget the average stock still has a clean surplus return on equity of 13%. So everything it's doing here is still above average, except for next year's slowing in revenue growth and net income growth. So we have to take a good look at this. Now, don't forget, we still have NVIDIA, we have Advanced Micro Devices, which are doing very, very well and are growing. So we don't want to put too many companies in our 30 stock portfolio that are reliant on the semiconductor industry. So we might take another look at Lam Research, and I'll tell you what, Adobe right now is going through the same situation that Lam is. So Lam is not the only company we're looking very, very closely at. Adobe is the other one. Now, again, we have Advanced Micro Devices and we have NVIDIA that are doing very, very well and growing. But let's see what Lam is doing price-wise. So we look at 1 year, and the black line is the S&P 500. So with the S&P up about 15%, this stock is up 4 times as much as the S&P 500. So yeah, we're looking at a stock that's still doing pretty strong, but it's had this recent drop-off. But folks, guess what? This past month has been very, very tough on the market as a whole, and the past quarter has been so. In other words, 3 of these, the past quarter has been tough on the market as a whole. So, and you can see it right here in the S&P 500. We have been declining over the past 2 months, and over the past 3 months, we have even declined. So we're looking at these 3 months right in here, and we're looking at these 3 months right in here. So yeah, it's been a little tough on the market, as well as all the stocks, especially anything that has to do with tech or semiconductors. Now, over 5 years, well, with the market up 50%, this stock is up 300%, which is 6 times more than the S&P 500. So we want to look at this big double top here. Or is it a double top? Now, right now, as I'm recording this, the market seems to be rallying after a pretty disastrous September. I shouldn't say disastrous. It's just been a negative September. So is this rally that we're seeing over the past day and a half, I mean, we're really talking short term here now, is that going to lift Lam Research back up to previous highs? And will we think about maybe selling this stock out of our portfolio? We have to see if there's going to be another stock that can replace it. So don't forget, we like to have 30 stocks in our growth portfolio, and if we cannot find another stock to replace it, then we'll keep Lam Research, because price-wise, it's acting pretty good in here, folks. Again, this is 5 years. This is 2022, which was a bad year for the market, bad year for techs, bad year for semiconductors, and then we see a beautiful rally coming off that low of last October, and I'm talking about 2022, and now here we are just about a year later. But are we going to come back up to this point once again? And let's look a little closer, and we see, yeah, up here, short-term indicator is giving us a buy signal. We can see down here this stock fell below its 50-day moving average, which is this blue line. Again, this is shorter term. This is a couple of months, and we could see the decline. in the last month. This is all of September. And now all of a sudden we see a rally going on here. And our intermediate term indicator down here looks like it's wanting to start back up. So a lot of it depends on this rally, especially going into the holidays. Could this be the beginning of a rally that takes us back up here? And then, well, we just have to see if we're going to keep this stock, because we're looking at a short-term double top. And let's go back to a longer period of 5 years, and we can see this longer. See that short-term double top we just looked at is right here. So when we look at a longer term, we see it a longer double top in here. So if this stock can get back up in here again, we have to think about whether we're going to sell that stock or keep it. And maybe things will change in the demand for the wafers that it makes for the semiconductors. So we have to see, but we're certainly going to keep an eye on this. We're certainly going to keep an eye on Adobe. So no, we don't want to sell it right in here because it looks like it's coming off a bottom. And if we draw this line here at this 600 level, you can see there has been a lot of support. It was resistance right in here. Stock went down, came back up, went above this 600 level, and has held that level all the way up until just the other day, where it bounced off it once again. So we have good support right in this area, and we'll keep an eye on that. If that support is broken next week or the week after, we have to think twice about this. But really, it is oversold in the intermediate term, and we do expect a rally out of this stock. And then we're going to keep an eye on it for the rest of the year, folks. So yes, we like Lam Research. It's done wonderful for us over the past several years. And as I mentioned, it's up 6 times more than the S&P 500 over the past 5 years. So we like Lam Research. But will the entire industry slow down? We'll have to see.